Hello everyone, a very warm welcome to all of you. You're watching BNSN, the weekend edition. I'm Mubina Kapasi.
Hi there, I'm Kamya Jani. Well, we have lots lined up on the show. We'll be discussing two stocks and viewer queries that are coming in on Tata Power as well as Radico Khaitan. In addition to that, we'll be discussing Sumesh's portfolio on our Portfolio Advisor segment. Let's then bring on board our guest who will be discussing fundamentals as well as technicals of the markets. We have G Chokkalingam, founder of Equinomics Research and Advisory, and we also have CEO Rudramurthy of Vachana Investments. Gentlemen, a very warm welcome to BNSN Weekend. First up, we have a query from Vinay, and he has a question on Tata Power. Let's listen in.
I brought 500 shares of Tata Power at the price of 70 rupees. Should I hold or sell these stocks? My investment time frame is 6 to 8 months.
Okay, that's the query coming in on Tata Power. Just run you through what's making news here. Well, clearly the joint venture has increased the power generation by 7% in FY16 for Tata Power. The company is largest integrated power company in India. And in fact, the company is likely to benefit from government's Uday scheme as well, and low coal prices is likely to boost the Mundra project. And clearly they're seeing some strong fourth quarter earnings beating the analyst expectations. So clearly, fundamentally, lots brewing for the company and working in its favor. Mr. Chokkalingam, first up, would like to know your thoughts on Tata Power. In terms of a fundamental perspective, where do you see Tata Power stacking up?
Yeah, fundamentally, you should hold on to the stock. It can reach minimum 85. The March results was quite surprising on positive side. Mundra plant has reported nominal profit. Even solar business has turned into black. And 1 year forward, earning looks quite rosy. It can easily achieve around 8.5 rupee EPS. So even if you assume 10 PE for this power company, you can certainly hope to get 85 rupees. So therefore, I would suggest hold on Tata Power.
Okay, let's also get in a technical view on Tata Power then, because that stock is something that has seen some traction, especially if you'll pull up the chart for the last 1 month or even the last 1 week, up by about 1.7%. And in fact, in the last 1 month as well, it has rallied by a good 4.5%. So, Mr. Rudramurthy, coming on that, where do you see Tata Power heading from here on? What are the chart patterns indicating for that one?
See, technically on chart from levels of 55 rupees, this stock has made a non-stop move till levels of 70, 75. The breakout which has come at levels of 70 is very strong, and I definitely expect this stock to further continue from here. I recommend a hold on Tata Power. One can look at for a very short term targets of around 76 rupee to 80 rupee. However, above rupees 80, lot of resistance, multiple hurdles will come into this stock. So I would definitely recommend this person to hold on till levels of 76 to 80 and then exit at levels closer to 80, and definitely above 80, too much resistance is seen at levels of 85, 90. So keeping this multiple resistance in mind, an exit at 80 is definitely recommended.
Okay, so a consensus hold call coming in from both our guests. Mr. Chokkalingam is optimistic about the fundamentals of the company, and Rudra really expects the stock to go by about 76, and 80 is the level where you should be exiting. Vinay has another question on Radico Khaitan. Let's listen in. What does he want to know?
I brought 700 shares of Radico Khaitan at the price of 88 rupees. Should I hold or sell these stocks? My investment time frame is 6 to 8 months.
Okay, that's Radico Khaitan for you. Remember that it is something in the consumer discretionary space, and that's a space that is seeing a lot of traction. There is potential for the EBITDA margin to expand. But of course, one headwind may be that pricing power is something that most of these liquor companies do not enjoy, especially given the kind of regulatory hurdles that exist for liquor companies. Mr. Chokkalingam, coming on Radico Khaitan, do you think that this is a hold for our viewer?
No, I would suggest sell. As you rightly mentioned, the regulatory hurdles are increasing, rather the political hurdles. We have already seen states like Kerala, Tamil Nadu, Bihar taking some steps. So this would definitely impact liquor company valuation. They used to enjoy super premium in the market, which is no longer possible now. But apart from that, fundamentally also there is a significant concern for liquor companies, that is falling cane output. Even for the current forthcoming season, the cane expected to be crushed is substantially lower than what it was last year. And this would affect the liquor companies because alcohol is the major input. And in fact, alcohol is a substitute for crude oil, and we have seen already crude oil bouncing more than 75% from the bottom. So both would mean alcohol price becoming more dearer. That would also hit liquor companies. Therefore, I would suggest a sell, and since he has mentioned 6 to 8 months time frame for his investment, I would place him a tactical idea more than a fundamental idea, that is J Corp. It's a zero debt company and sitting on investment of some 1,500 crore. A lot of that investment has gone into two SEZ. Those SEZs have got nearly or more than 8,000 acres of land in Navi Mumbai. So I firmly believe that this stock can unlock potential from this land bank, and its book value is also around 110. So in this stock has given many times in the short time frame easily 20-30% return. This time around also it can give, because it has corrected from 90 rupees in the last 6 months to trade around a 70-71 level. So it can easily give some decent return in the short term itself.
Okay, that's the call coming in on Radico Khaitan, and clearly an exit call coming in from Mr. Chokkalingam. There are concerns about the alcohol stocks, sugarcane output being one, the state ban being the other. So clearly nothing's working in favor of Radico Khaitan. He instead recommends you buying into J Corp, and those are the levels that you should be watching out for. Rudra, would like to get in your thoughts on the technicals and in terms of the chart patterns. How are you viewing Radico Khaitan, given that over the last 1 week the stock has gained about 4.5%. Do you see some more room on the upside for this one?
See, Radico Khaitan has definitely seen a clear down move from levels of 120, 125 all the way down to levels of 85 now. But it is clearly at an oversold zone, and a strong support for this stock emerges now closer to 80 rupees to 84 zones. So having seen this stock very close to this crucial support, I would definitely recommend a hold on this stock with a stop loss at 84. If he has a quite bit longer time frame in mind, the investor here can even keep a stop loss at 80 rupees and then definitely ride on the upside. And I see levels of 110, 115 to come back, seeing an entry at 88 where he has entered. So I feel an 80 stop loss can be kept on this stock, and he can look at targets of 115 to come. I won't definitely recommend an exit right at this moment where strong supports are emerging, and hold is suggested. Keeping a stop loss of 80, he can hold on to the stock looking for targets of 115.
Okay, a hold and targets of 115 is what Mr. Rudramurthy is recommending for Radico Khaitan. Let's slip into a short break, but on the other side, we'll be discussing Sumesh's portfolio and what he has in them. Stay tuned. Welcome back. You're watching BNSN, the weekend edition.
Well, time then on to our portfolio advisor segment, where we get our fundamental expert to address the portfolio. In fact, we have a portfolio coming in from Sumesh, who is 29 years old. He's a government employee and has a time horizon of about 2 to 5 years. Let's take you through what he has in his portfolio. Well, he has some shares of Hindustan Zinc, which he bought at a price of about 185, and he holds about 1,300 shares of the same. He has about 20 shares of Tata Steel, which he bought at a price of 326. He holds about 670 shares of Royal Lockheed, which he bought at a price of 85. In addition to that, he also has about IDFC shares. 570 is the quantity, and the buying price has been 48.50. Add to that list is V-Guard, 30 shares bought at a price of 12.30. Havells also makes it to the list, 320 shares, 331 was his buying price. Coal India, he has some 500 shares of Coal India, which he bought at a price of 346. 116 shares of Spark bought at a price of 430, and 50 shares of Ambuja Cement, which he bought at a price of 230. So clearly a mix of large as well as mid-cap stocks. Mr. Chokkalingam would like to know your thoughts on Sumesh's portfolio, and let's discuss the first three stocks specifically. Hindustan Zinc, which he bought at a price of 185. He's making some marginal gains there. Tata Steel has been the other stock that he holds in his portfolio. And what's your call on Royal Lockheed?
Before giving a view on these three, I just wanted to make one observation on his portfolio. He has got 60% allocation to just two stocks, Hindustan Zinc and Coal India. So that kind of stock concentration is not good for portfolio construction. Particularly, both are into resources related field. So if anything goes wrong, the whole portfolio can see a crisis. Having said that, he can continue to hold Hindustan Zinc. Maybe he can reduce the exposure, but otherwise, outlook on Hindustan Zinc, once again has become too positive because this week we saw zinc price soaring to 10-month high. In the current calendar itself, it has gone up substantially. So therefore, he can hold on to Hindustan Zinc. However, Tata Steel, I would suggest a sell. I continue to believe that the European operations would have pressures, and unless they sell off that business, it would remain as a drag on consolidated earning. And he can sell Tata Steel and buy Moil India. The company has announced a board meeting for buyback. It's sitting on a huge cash. Cash is 80% of the market cap. And the IPO was at 375 about 6 years ago nearly. And now, substantial discount to IPO. So I firmly believe that the management might consider substantial premium for buyback. Even otherwise, fundamentals are improving for manganese ore companies. And third, Royal Orchid, I looked at the numbers. Consolidated level, it is making losses. But still, the stock has gone up substantially, very high from the 52-week bottom. I would suggest sell Royal Orchid Hotel purely based on the fundamental and suggest him buy JB Chemical, which has come out with excellent results for FY16, and its adjusted net profit is up almost around 50% year on year, and a strong balance sheet, lot of cash. So therefore, I would suggest this switch.
Okay, that's the call coming in from Mr. Chokkalingam. It's a hold on Hindustan Zinc, whereas a sell call for Tata Steel and Royal Orchid. But moving on, and let's get in a check on the next three stocks that he holds in his portfolio. It's IDFC, with wherein he's entered in at 48.5 rupees, V-Guard at 1,230 rupees, and Havells at 331 rupees. Mr. Chokkalingam, what would you advise our viewer on these three stocks?
Yeah, I would advise him to hold on to IDFC. All these PSU banks have been punished a lot because of the asset quality recognition which was forced on them for 2 quarters. I think the NPA cycle has peaked out, and going forward they should improve. IDFC being a holding company, a bank, I am sure would recover from this low bottom. And similarly, V-Guard I would suggest sell. It's a great company, no doubt about it. It has done phenomenally well. But on FY16, it is trading at around 37 PE. Now, if you look at carefully FY16 performance, although the top line continues to grow, the major contributor to super profit growth has been substantial moderation in the material cost. Now, all of us know post February, March, there has been a substantial rise in the resource prices, including the material and steel prices. So therefore, going ahead, V-Guard will not have that kind of benefit on margin expansion. So therefore, I would suggest him to sell and buy Sasken Communications. It is sitting on huge cash. Cash is 60% of the market cap. And so far, we have seen 4 to 5 mid-sized IT companies have been taken over by larger companies. I firmly believe that Sasken also may join. Even if it doesn't join, there will be re-rating of valuation, because Sasken Communication trades at just 0.5 times enterprise value to sales. All the acquisitions happened at around 1.5 times. And the promoter stake is low, around 40, and they have been using this cash to do buyback. So I would expect another buyback at a substantial premium to the market price, considering the promoter holding and cash on the books. And Havells he can hold. It has moved up a lot, but still March result was quite very impressive. And after FY16 results, it has become slightly attractive in terms of valuation. Therefore, he can hold on to Havells India.
Okay, that's the call coming in. You could hold on to IDFC, a buy call coming in for this one. Replace the second stock with Sasken Communications. The fundamentals look extremely strong for Sasken. V-Guard may be a good company, but the future margin expansion may not be very optimistic as far as Mr. Chokkalingam's view is concerned. In terms of Havells, well, the March quarter has been good for the company, and expect positive momentum to continue for Havells. Let's discuss the other three stocks that Sumesh has in his portfolio. So Mr. Chokkalingam, he has Coal India, which he bought at a price of about 346. He also has entered into Spark. 430 was his buying price, and clearly he's making a huge loss on this one. Ambuja Cement is the other one that he has in his portfolio. It's pretty much at the same in comparison to his buying price. There hasn't been much of a movement as far as Ambuja Cement is concerned. What's your call?
I would suggest to hold on Coal India. Still sitting on little more than 60 rupees cash per share. Next 2 years, I expect a firmly special dividend to continue, considering the government fiscal balance and the recent oil price rise, which will hit the government balance sheet. And also globally, Indonesia, China, many other countries have started cutting down the coal output. So going forward, that would also be positive. And last week, Coal India increased the coal prices. They are likely to get the benefit of nearly 4,000 crore out of this price hike. So considering all these facts, I would suggest to hold on Coal India. Spark, I am not that comfortable with the valuation. Still, I would suggest him to hold because the stock has already corrected from the peak substantially. Secondly, it gives you a lot of opportunities in terms of tactical. Whenever the news comes about, possibility of finding some molecule, the stock zooms. So therefore, I would suggest him to hold. Ambuja Cement, I am not at all comfortable in terms of valuation. All these companies are growing their cement volume in a poor single digit, but whereas PE multiples are substantially higher than 20, which is historically very high level. I would suggest him to sell Ambuja Cement and buy KCP Limited. It's a beautiful mid-sized company. It has got cement and it has got 5 sources of energy to support cement operations. And more interestingly, it has got a substantially profit-making sugar subsidiary in Vietnam. And that has made us a phenomenal profit. It would continue to make a lot of profit because sugar prices have hit 23-month high last week. And the stock, certainly can become even a multi-bagger in the long term because of its huge land bank in Chennai. So considering all these facts, I would suggest shift from Ambuja Cement to KCP Limited.
Okay, that's the call coming in from Mr. Chokkalingam. A hold on Coal India and Spark, but replace Ambuja Cement with KCP. Let's get in a roundup of all the stocks that our viewer has in our portfolio at this point of time. Hindustan Zinc, well, a hold on that one, but replace Tata Steel and Royal Orchid with MOIL and JB Chemicals respectively. A hold on IDFC as well is what Mr. Chokkalingam is suggesting, but replace V-Guard with Sasken and hold on to Havells in your portfolio. Coal India and Spark are keepers as well, but replace Ambuja Cement with another mid-sized company, KCP, with exposure in cement and electricity as well.
Now remember, this is just a model portfolio. Please do consult your financial advisor before taking any investment-related decisions. Let's slip into a short break at this point of time, but on the other side, we come back and get you some top recommendations by each of our experts. Stay tuned.
Welcome back. You're still tuned into BNSN, the weekend edition.
Well, time then to get in some stock-specific recommendations as well as view on the markets from each of our experts. Let's do just that then. And over the last 1 week, Nifty has gained, in fact, on the upside, went above the 8,200 marks. It was clearly a good week for the Nifty. Get in a word then from Rudra and find out what the key levels that he would be monitoring in the coming week. Rudra, what's your view on the Nifty?
See, Nifty having seen over 5% rally the previous week, it has continued its momentum even in the current week. This itself clearly shows bulls are completely on control, and however, one has to keep in mind crucial levels of 8,150 on Nifty spot, and on futures it comes at 8,161. So keeping a stop loss of 8161 for the entire week, I will be riding long. However, one has to understand targets of 8,300 and 8,330 is what I see for a very short term. So we are now in this range of 8,150 to levels of 8,300. So one has to keep in mind the time frame at which they are trading. However, for very short term, we are seeing oversold levels which are seen in market. So definitely I would recommend someone to enter long only on dips to levels closer to 8,150 and then look at targets of 8,300 to 8,330.
Okay, so a buy on dips is what Mr. Rudramurthy is recommending, especially when you look at the Nifty. But Mr. Rudramurthy, also tell us about what are the top trading recommendations that you'd give our viewers?
Yeah, I have my first buy call on SKS Micro. This stock we have been recommending from levels closer to 540, 550, where a clear breakout has been there, and all NBFC stocks are performing very well. SKS Micro for me looks very good on charts too. It has given a clear breakout also above levels of 650. Now it is headed towards targets of 740. So one can go long on SKS Micro for levels of 740, keeping a stop loss of 665. I have a second buy call on Man Infra. This stock from Infra looks very good, and also a lot of accumulation has been seen in this stock on every dips closer to levels of 34, 35 levels, and stock is definitely showing short-term momentum on the upside. Huge volumes have been built up and price volume breakout is seen in this chart above levels of 37, 38. So I will recommend a buy in Man Infra. One can look at targets of 47 on Man Infra, keeping a stop loss of 36. I will ride long on Man Infra.
Okay, those are some recommendations coming in from Rudra. But in terms of some wealth creation ideas and for somebody with a long-term horizon, Mr. Chokkalingam, what is it that you would like to recommend?
Yeah, I already mentioned about KCP Limited. That is one of my long-term wealth creating ideas. In addition to what I already mentioned, the consolidated profit has grown by 85% in FY16. That was largely due to robust profit coming from sugar business in Vietnam. And interestingly, the increase of fixed assets by 32% in FY16, largely on account of expansion of capacity in Vietnam. The sugar mill is being expanded from 6,000 TCD to as much as 10,000 TCD. And since sugar prices are very firm at international level, it's going to contribute a lot more profits. Secondly, this company being more than 5 decades old, it has got a lot of land bank. Recently, one such surplus land bank has been converted as a star hotel, and that is also going to add to a lot of profits to the bottom line. And third, it has got an engineering division in Chennai. It's a several decade old plant. Recently started making losses. So there is a possibility of unlocking the surplus land bank which is associated with the engineering plant. There is a lot of land bank which is very close to Ennur port. So in case they unlock this land bank, then it can become a multi-bagger. Even otherwise, I am expecting a minimum 10 rupee 1 year forward earning. So if you assume 10 P also, one can easily get 100 rupees on a current price of around 80. That's a very conservative estimate. But 2 to 3 years, I firmly believe that this stock can become a multi-bagger. Second idea is Oil India. It's a net of cash. It is a zero debt company almost, and it is giving an excellent dividend, and it is trading at around 9 P on FY16. I firmly believe that the oil price would continue to rise. Already we have seen growth improving in Japan. Even in Brazil and Russia, the contraction has come down, and Germany also reported a lot of numbers. So I firmly believe that the oil price would continue to remain very strong. That would be beneficial for Oil India. This stock would be more suitable for very conservative, elderly, retired people because it gives you dividend yield of close to 5%, and that kind of yield you are getting when oil price is still 40% below 1 year, last 2 year high. So when oil price increases, its earning will improve, the yield will jump even beyond 5%. So therefore, I would suggest Oil India.
Okay, so KCP and Oil India, 2 buy recommendations coming in from Mr. Chokkalingam. Thanks so much, gentlemen, both of you, for joining us on BNSN, the weekend edition. But with that, we are completely out of time on this edition of the show. From Kamya, myself, and the entire team that put the show together, thanks for watching and have a lovely weekend.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.